Morning traders, Paul here with GammaEdge. Today is Wednesday, the 21st of December. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today. All our market models remain in cash or short. We are seeing evidence of a potential bottoming in the shortest of timers that we have. Be aware of that. We could break north. SPX plus GEX, which is our right goalpost, short-term upside target, 4,100. 42 is right behind it. You'll see that on the last slide here. So we are looking, if we do push north, that these could be in play. Minus GEX, which is the left goalpost, 3,800. It's been there for a while. We see this as the downside line in the sand. We are not anticipating a loss of this into the close, but if we do, definitely bearish. We think we've got support right around that 3,800 minus GEX level, just above it. And we have overhead supply starting around 39.46 or so, maybe a little bit north of that, but we think this is the active playing zone for today. From a good perspective, the transitions are narrowing from above, which means that calls are being added overhead, and this is bringing something that we call the transition GEX downward. Historically, this is short-term bullish, and we want to be mindful of that. Contrasting this, charm flows support continued downward, a weak pressure. It's a second-order effect. But nevertheless, it exists. So the dealers are having to sell as in-the-money puts continue to charm their way towards a limit of -1, forcing the dealers to go to a +1, and then to hedge flat, they have some background selling. Now, it's a very weak phenomena, but it's there. It's present. There's no question about it, and you'll see that on the delta moneyness chart. All of this stated, when those deltas on those in-the-money puts come off, they will need to be adjusted, and that is a first order effect, and that is a pretty significant effect. So when they close or they expire, the dealers will have to adjust, and that is a reversal of that. So they will have to start buying to adjust for those in-the-money puts coming off, and that could push us up in little bursts, so be mindful of that. Taking a look at the cumulative tick model, the eye easily sees the downward sloping long-term trend lines. Because of that, we are sellers of the rips, so anything that comes up, unless it penetrates the long-term ribbon and causes that inversion that many of you are aware of, we are not long-term bulls. We are still short-term bulls. That being said, you can see we bottomed and just kind of coasted all day yesterday, and that's significant because we are anticipating either a break to the downside or a break to the upside. And right now, just given the distance and given that we're digesting and starting to catch up, we would not be surprised of a upward move, especially as those puts in the SPX, those in the money puts, are closed. Key levels, no real changes at all. 4,100 upside, 38 on the SPX combo complex over here on the right-hand side. The SPX PM complex, which is here on the left, no change. 4,000 short-term upside, 38 downside. So the confluence of the 38s are important. 32 is POI, the put open interest within the overall structure. That had dropped yesterday and is now fairly stationary. So overall, not a lot of action yesterday. Just be aware of that. Just want to call out this 38.35. This is the JPM leg. It's actually becoming relatively nothing at this point. It's getting neutralized as we speak. Expected move, still a very tame, slightly over 2%. We would anticipate that this is going to remain here as we go into the Christmas holiday. Taking a look at the PM-Settled Complex, just a couple things to key out here. So the transition zone is narrowing. It's coming down from above. And in part, the deltas are coming down, and we're seeing the gamma start to pick up a little bit. And that's because calls are going in. Short-dated calls are going in the overall structure here. We are mindful of this 38.35 line, which is sitting right here. You can see a couple of the transition points in here. One thing to note, We have this put dominated delta structure with a little hiding pocket down here that we don't think we're going to go to because that 3,800 is sitting right here. Charm is going to place downside pressure on the markets with respect to the PM complex. The PM complex is smaller, of course, than the AM complex. But nevertheless, this is what is traded, and this is fairly short dated. So we are expecting still a continuation of some downward pressure with the potential to push upward, as I just spoke of. The 0 DTE, again, narrowing range. You can see the key. This is the dominant call expiry for today, sitting right here at 3,900. The 3,845 is the plus GEX expiry for the 0 DTE. So getting above that would be constructive, would be bullish. Here we are at this 3,821 level, which is where we closed yesterday, and you can see we're right at a transition here, and then that downside 3,800. Again, another confluence in the 0 DTE. So we're seeing this over and over and over this line. So remember, this is all vaporizing, so that's important, and you can start to see some of the calls. Call-dominated areas down here. These are in-the-money calls that are starting to appear. So that's actually a good structure, and we would want to see more calls come into the overall area here. Looking at the 1 DTE, a couple transitional points here. You can see that we're narrowing again in the transition here. We think that is potentially bullish. Here's that 3840, 3825. So we even have a narrowing here in the overall gamma. Now, this is our estimate of tomorrow. Now that will change, of course, because of the intraday volume that is occurring in the SPX complex is pretty significant. Between 40 and 50% of all of the volume in the SPX is traded on a 0 DTE time frame. So that's something to pay attention to. But the narrowing of the transition we see as bullish. Short-term bullish, and so we are looking for prices to start pushing upward, especially as we continue to remove some of the barriers to go north, and the positive gamma and positive delta start appearing. Taking a look at the overall complex, this is the mothership. Both of them combined, AM and PM. You can see red all the way up and down, dominating the delta structure here. That is fairly significant. I want everyone to stop and take a look at this, because in the big picture of things, we're seeing the JPM hedge continue to get neutralized here in terms of both gammas and deltas. The numbers are going down as people put long calls on top of those short calls. Et cetera, et cetera. The other thing that I think is important that's happening here is we're going to be watching for some, as calls are added here, we should start to see a few of the delta strikes flip from a negative value to a positive value. You can see the lower magnitude ones here. They will be the first to go. So it'll be dependent upon where obviously people think where they want to speculate on their out-of-the-money calls that they start opening up. You can see gamma is starting to turn decisively green, which means that's a call-dominated gamma structure short term. And the more we see of this, the more we bring down this transition range and bring it down tighter and tighter, coupled with the spot price, this yellow bar, moving up into the transition. We have the potential of moving north. Here's that line in the sand that I talked about, 3,800. So just be aware of the overall structure. Still quite negative, but which means put dominated in our context, but looking like the first stages of getting better. So let's just see where we go. Rotated these a little bit so you can see them on edge. So we got DTE. So this is the end of the month, end of the quarter, end of the year, actually. Call side here. This is going to get absorbed. So these are out of the money calls. These are in the money calls. And basically, they're going to basically be absorbed by what's happening over here. So this becomes a nothing muffin. Over here on the put side, we're mindful of as we march through time. So here we are at the 0 DT. This is today, right? So we're looking back or looking forward into time. So this is the crystal ball looking forward. You can see we've got just a tremendous amount of in-the-money puts that we're going to have to plow through. And when we have those in-the-money puts, why this is important is that the owners of these things have two choices. They can do nothing, and the SPX is cash settled, so that is a viable outcome. They're not going to get assigned anything in the SPX. They will just wake up, and in this case, they will have profits in their accounts. And when these deltas come off, these are obviously limiting towards -1 because these are puts and they are in the money. Their delta goes from -1 to 0. They get longer. The dealers go from +1 towards 0. They get shorter. And when the dealers get shorter due to this expiry, there's a natural reaction, first order reaction, to compensate by buying. So we could see this ebb and flow as the deltas are adjusted as a first order, and could actually start pushing us upward depending on what happens. So overall, in the do nothing solution, we could see a weight on the markets because the charm flows, especially with these right at the boundary, right between this tan area and the green area, these are literally at a delta of 50 and -50, and then as we march through time, they go -60, -70, -80, and that natural charm will put a downward pressure on the market. So you could see prices start to dip, and then near the end of the day, we could see these rallies as the dealers, knowing that things are going to be having to be compensated for in terms of deltas, could be doing their adjustments. So just be mindful of that as we go forward. Taking a look here at the final slide. Plus GEX 4100, right goalpost, left goalpost down here at 3800. This is the 42 line that I was talking about. You can see it's getting in some magnitude. We actually grew a little bit too. We didn't change in price, so this is purely due to calls being added, long calls being added. So 41, 42, here's 4,000, 40, 50 here. And you can see they are not in direct contention yet. So we haven't seen a move up into transition here. We need to move up into transition. So 3870 becomes kind of that first area that we want to successfully close above. 3900 would be the next one to close above. And you can see then once we do that, we've just got a few pockets here of negative gamma to contend with. But we then become in this, are sitting in this positive gamma regime. Do want to call out at the end of January, 4145 sitting right here. That's kind of that upper marker right now where we would have a hiding area if we were to, massively rally. Don't anticipate it in any short time frame right now. Here's the 3835s, which everyone knows about. This is the December 30th. And you can see we're below that. And while we're below that, the dealer response is actually to buy just from this alone. But as I said, it's offset by all those ITM calls, or ITM puts. So I'm not really convinced this is anything to worry about or contend with. I think it's being completely absorbed by the market and really is a nothing muffin. So that being said, 38.21, we got to push, and if the bulls are going to have any chance, line in the sand, 38. Below that, things get pretty ugly pretty quickly. So our view of things right now is that we need to see some improvement in structure here. If we see that, we're probably going to be buyers of the market. Well, the CT will probably push north above the ribbon, and that could change our market model. So be fluid, be adaptive, and we'll see where we go. So that's it for today. If you have any questions or comments, come and join us at GammaEdge.us. Click on the pricing tab, fill up the blanks, and come on in, talk to us. We've got a great group of traders, a lot of tools, a lot of things to help you think through what dealer response is and what the landscape is. Follow us on Twitter at GammaEdges, please. And then here on YouTube, of course. If you like today's content, let me know. If you smash that like button, it gives me immediate feedback that I'm providing content that you want to see. That's helpful. And then, of course, subscribe, because Taylor, myself, and Michael, when he gets his voice back, will be posting videos. And that helps you stay abreast of how we see the Gamma and Delta landscapes. So with that, make it a great hump day. Hope to see you in the Discord. Thanks, everyone.